Mondi Packaging South Africa was formed in 2005. Shanduka coming on as a major shareholder in that group. Why take it back out again?
Well, the reason really is that we've allowed it to grow intentionally into areas that aren't in our core product focus area. And they moved into plastics, into rigid plastics particularly. That's not a focus for Mondi overall, but the decision with Shanduka some time ago was to allow it to broaden its product offering, ultimately with the intention of us diluting and exiting the business. So this is simply a further step in that process.
So following that demerger, you're going to actually sit with about 90% of the business. What happens to that 90% holding? Does that get unbundled to shareholders?
We're going to refinance the business pre-demerger. At that point, we'll own 90% and Shanduka about 10%. And our 90% will then be given to our shareholders through a dividend in specie.
Okay, so we will see this starting to trade on the JSE and actually
Correct.
Trading.
Yeah, that's absolutely right. So we will have no interest post the demerger. Shanduka will have 10% and the rest will be owned by the market.
I presume there must be some sort of synergy between your paper business here in South Africa and the packaging business. Do you keep that synergy? Do you still keep those businesses working together post the demerger?
Yeah, the reality is there's actually very little synergy between these two parts of our businesses, which is part of the reason why we brought Shanduka into this particular business rather than other parts. So it could be separated over time. So we don't lose much at all from a synergy point of view. There are no shared sites. There's very few shared facilities at all. So really, it's a very easy separation for us. It simplifies our group structure. We take out a business which has a substantial minority interest in it. The business itself is highly geared at the moment, and we need to recapitalize that business to enable it to take advantage of its opportunities. So I think this is a bit of a win-win for all. It's a case of giving an asset to the shareholders and giving that asset the opportunity to explore and create value to its maximum potential. We aren't prepared to allocate further capital to pursue that rigid plastics expansion. So best put it in the marketplace and let it source the capital from there.
Now, Shanduka has committed to remaining a shareholder for the short term with that 10% it will have post-demerger. Longer term, is Shanduka, has it indicated whether it would like to remain a shareholder of this business? I
think Shanduka likes the business. Clearly, for them, it's a financial investment, and they are a Black & Palmer partner in that business. Those decisions are theirs for the future, but clearly they are comfortable to remain shareholders, certainly for the time being.
What are some of the growth opportunities that the packaging business sees in the South African market?
Well, in terms of the corrugated side, they are the market leader, so fairly limited opportunity to expand much beyond where they are. On the rigid plastic side, they are leaders in each of their segments, as it were, but there's plenty of opportunity to grow there. And there is opportunity on the corrugated side outside of South Africa, in Africa. So that's where they're going to be focused, to try and exploit those types of opportunities. I think the management team there is very excited by this development. It gives them a real chance to take the business forward, and it gives us a chance in Mondi to allocate capital to our core growth areas for the future.
And just looking back to the most recent results, it made up about just under 10% of your total group turnover. The rest of the South African business contributing about the same, is that correct?
Yes, the rest of the South African business from a turnover point of view is about the same. From a profit point of view, the rest of the South African business is ultimately a bigger business in the longer run. So this represents about 10% of Mondi, MPSA does. Post the demerger, South Africa will represent about 17% of the Mondi group.
What does this do anything to your listing status? Because we had that changed last year, I think it was. You were an inward listed company, you're now fully listed, you're on the top 40 now. Will any of that change post this demerger?
No, the listing structure will remain unaffected by this. Both PLC and limited shares can be held by domestic institutions as a local asset. They can at the moment, and they will be able to post the demerger. So no change at all in the listing structure. There is an adjustment process for value because the limited shareholders get the MPSA shares, the PLC shareholders don't. So there's a consolidation of the limited register that will take place post the demerger to make sure that both shareholders retain the same share of value.
What's the prospects looking like for the packaging business at this stage? Because with the most recent results, profits up quite nicely, I think in the region of 30 to 40% on an operating level, and really seeming to see the start of an economic recovery in that business. Is that something that's continued through to the new financial year?
Yeah, look, I think overall for Mondi in total, we've certainly seen that recovery continuing through quite nicely. A lot of MPSA's improvement came last year on the back of that improvement that came through on the plastic side. And that improvement will certainly continue. The corrugating business is improving, but clearly it's much more stable. It's a much more mature position they have in corrugating.
And what sorts of opportunities are you seeing at a group level for growth, particularly with the money that you will eventually get from this demerger?
Well, we won't get money from the demerger. We don't need any money. That's the issue why we're demerging it principally rather than trying to sell it, because quite frankly, if we sold it, we'd have to give the cash back to our shareholders. So we're going to gear it at a sensible level, very similar to our levels of gearing, and then give the asset to the shareholders. Right now we're in a pretty good cycle in terms of the paper industry globally. We're running well. Our product exposure, and we've got lots of packaging exposure internationally and printing and writing exposure both here in South Africa and internationally. Those grades are all running well from price and volume momentum. So profits are improving nicely, which is good. I think right now it's probably not the right time to run out and buy things necessarily. Values are reflecting the improved environment. It's the right time to consolidate the balance sheet, get the debt levels down, increase distribution to shareholders, and look out for opportunities which will come at the right value at some point.
Is this a deal that needs to be voted on by shareholders, and have you been talking to your shareholders about it?
It does have to be voted on. I mean, part of the reason of announcing it today was that it was announcing the intention to do the deal. It gives the shareholders time to understand what's coming towards them. The official documentation will come out during May, and there'll be a special shareholder meeting that has to take place in June. We are now talking to the shareholders. We couldn't prior to today, but we are now talking to them to ensure that they understand what we're trying to do, why we're doing it, and what the benefits are for them.
And when would you expect this all to be finalised and to have that new listing on the JSE?
Sometime the back end of June is when one would expect to see this all done and dusted. A couple of months to go still.